Hi, in this video I'll be showing you my favorite strategy that I use in order to avoid price manipulation. Most of the zones where we lost money in trading are zones of manipulation, and these manipulations are carried out by the market makers or the smart money traders. So it is important we know how to navigate our way, and as such we can maximize our advantage when it comes to trading. One of those methods I use, and the second, which is going to be a new method, is what I'll be sharing with you in this video. First is for you to focus on a continuation trade. What that means, avoid anything that has to do with a reversal. For instance, here in this zone, price has been selling, so avoid attempting to catch a reversal. By all means, if you don't know what you are doing, avoid it. But if you know what you are doing and you are sure, you will know that this is a divergence. And because of this divergence, you can easily find your entry if you are patient enough to allow price to close above these moving averages. But however, what I want to share with you is not you looking for a reversal trade, but rather a continuation. Because the advantage of this continuation is it come up after the manipulation has taken place. For instance, in this zone, this is a short pattern. So we will be trading the flag short pattern. This is one of the best way, my favorite and my most effective strategy. If you are conversant with this channel, you know that we don't play with anything that has to do with a bullish or a bearish flag pattern. So look at this. Price break out of this short pattern, retraces it, give us an engulfing candle after the retracement. Our entry is up there, and our CCI crosses above the level of 50. That is one of the entry. So we use this short pattern to make entry, and this helps us to avoid manipulations because already price has moved. So there is no more it is a pure continuation trade that is happening here right away. Okay, I already make a first entry when price break out of this zone already. You can see that, and then I was hoping price to push up. That is why I made that second entry there. So now let's move further and show you some more tips on how this particular pattern can function effectively when it comes to trading. Then number two, you can see what happens here. All of these manipulations, this is a divergence on the price break out of this zone. So you don't have any business with all of this that price was doing. Or I can simply put that you don't have business with whatever price is doing below. You are not looking for opportunity to buy if price is playing around the lower Bollinger Band. That is if you want to buy. And you are not looking for opportunity to sell if price is playing around the upper Bollinger Band on a H1. So what do you do? Once price closes above our middle Bollinger Band, remember before now we've stated it critically. Look at what will happen. Price went up, came back, and then retest our middle Bollinger Band. And when that was happened, look at it. We have a pin bar candlestick formation. And if you are conversant with this channel, we only trade two type of candlestick: pin bar hammer or bullish and bearish engulfing pattern. Then we have this confirmation of our CCI crossing the level of 50 because we want to make a buy entry, and you can see that trade playing out peacefully and perfectly. Here is the trade and we are into it. So you see how it is playing out to the upside. All right, so you can keep watching again. Anytime price pull back, price will go up, it will pull back into our moving average. Allow price to close and give you a candlestick pattern. Look at this one. Price close and give us a bullish engulfing candlestick pattern. It becomes your entry again, provided your commodity channel index is not at the level of 80 and 90 then on a lower time frame. That entry is on a 50-minute time frame. This is it. You can see it. Look at where it is coming from. All right, so this is, and then the other one that happens there, here is it. And look at where it is coming from. Why price is above that particular middle Bollinger Band, and then you wait for a pullback here. Price closes above your moving average. Look at another entry. Pin bar candlestick, right? Commodity channel index crossing above the 50 level. So when you keep repeating this, you are following the trend and you are avoiding price manipulation. You are following the trend and you are avoiding price manipulation. So this is my favorite strategy. Okay, I just shared with you how this always, remember I said even if price close the same way, if price closes below Bollinger Band, it is not a change of trend until it retests it and continue to the downside. So even if price closes below the moving average, if price did not retest the moving average and come to the downside, and it went back, closes above it again with a bullish candle, it is still a buy continuation. So you can still find your entry trading that way. So this approach is very much easier to do. It is something you can always take advantage of. It plays out most often. And remember, I've shared with us over time of this chart pattern, the bullish and the bearish flag pattern. So you can find it everywhere. Look at this 15 minutes. It makes trading simple and easy, provided you are trading in the direction of the trend. Remember what I told you, allow price. You can see how price is falling under the lower Bollinger Band, and I am looking for my entry on the 15 minute, and my focus on this 15 minutes is that I am looking for charts pattern. So do you see that? So the system must not be complicated for you to make profit. These are bearish flag pattern in a downtrend. These are continuation patterns that I will focus on in order to take my trade. So you can see this. Even in this scenario, if this particular formation now closes below this moving average, here is a sell. If it closes below it, because we are very much in a downtrend, because price just left the downside to above the moving average. If you want to buy, Let it retest the moving average as it is doing now and continue to the upside. But otherwise, if it closes below it safely and CCI closes below 50, it is a selling opportunity. So this is what you can do repeatedly and often, and it works, and it is still working. You go through your chart and you see this pattern playing out all the time, every day. You see it playing out every day. Let the market gives you a direction. Once that is established, all you are doing is for you to follow the direction of the market, which is your continuation trade. And I believe you have learned something new. Our setting remains the same. This is for the Bollinger Band. This is the first moving average, 25 exponential. The second moving average, 10 exponential. My relative strength index and commodity channel index. So these are the setup, set it up, backtest, practice on your demo before you go live. And please like the video, share, subscribe, comment, ask your question in the comment section.